Hey everyone, and welcome back to another episode of Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. So today we're going to cover a bunch of different things. We got some economic data that we're going to cover, as well as we've got news kind of regarding Bitcoin and crypto related assets, and then we'll finish off on the charts, kind of see what's going on in the markets and see what might be the next moves here. So without further ado, we're just going to jump right into things. The thing we're going to look at first here is the employment numbers that have come out this week. So today we had the January ADP jobs exceeding expectations. We see here in the private sector, they added 183,000 jobs, exceeding expectations of 148 to 150,000. So really just smashing that expectation there. Also surpassing the revised December figure of 176,000. We will watch this going forward, see if they do make a revision after the fact. I have said that before. Lots of the times they release these headline numbers and then revise them down after the fact. Lots of the times we do see that some of the jobs are kind of in the government sector. So it might be a way for the government to actually kind of skew the unemployment data to make the employment sector look a little bit stronger than it actually is. That being said, we also kind of have touched on the fact that there are people having to take multiple jobs and people having to come out of retirement, also kind of supporting that unemployment numbers there. So we see here there was a particular raise in the service sectors, and manufacturing experienced a decline. So that's interesting to note. If we do experience more tariff escalation or more tariff implementation, then expect more declines across that manufacturing front just in the near term. Obviously, though, we see that the strong job performance suggests that the Federal Reserve might delay interest rate cuts. That's what we've been saying, so this shouldn't be a surprise to you if you follow this channel. We expect there to only be maybe one rate cut this year. That's what the market is pricing in. There is the potential for two if the economic numbers support it, but the way things are, inflation sticky, unemployment strong, there's no reason for the Fed to have to cut rates further. The only thing is obviously Trump. He wants rates down. He's urging Jerome Powell to cut rates. That being said, again, the Fed is an independent entity. They don't have any political bias. They don't make decisions based on political bias. So we'll see what happens going forward. But I kind of, again, expect interest rates just to remain flat for now. But yeah, we'll just move on here. So we'll get into some more jobs data that we had this week. So we had the total non-farm quits here, about flat. So obviously that's good. We don't see people kind of quitting their jobs here. We do see, I'm going to show you kind of, look at this large divergence between the quits rate and the S&P price, and kind of look back through history, kind of back to 2010. This is right around the great financial crisis. So watch, you see the S&P kind of diverges from that unemployment, like right through here, and then it mean reverts. So you can see the two lines come back, meet each other before kind of reversing the other way, going on another divergence. So you really want to pay attention to those. Those could offer really good buying opportunities. Essentially, if you bought every single time that these like diverged and then mean reverted, you know, you'd be buying here, you'd be buying here, you'd be buying here, you'd be buying here, and you'd be buying here. So all pretty much nailing the lows very well. So we'll be watching this chart going forward. Watch for that kind of divergence to narrow a bit. But again, for the way it looks right now, until this starts ticking up, then I'm not too concerned about that. Or if we see the S&P start to really experience a bit of a sell-off, kind of come back down. So just something to watch. If we do experience that mean reversion of this divergence, then it could be a good buying opportunity, and we'll assess that as it kind of comes. Flipping over to total non-farm hires for the month, added 89,000 jobs there, obviously. So ticking up, looking good. Yeah, we want to see more hires, but again, look at this divergence, and you see it all the time. Essentially, these just mean revert. So if you do see kind of the employment numbers starting to mean revert with the price of the S&P, again, it could offer a potential buying opportunity. We'll just flip over, though. We'll get into a bit of Bitcoin-related news. So obviously, we kind of have Hong Kong following in the footsteps of the U.S. We've got a Hong Kong legislator exploring the feasibility of incorporating Bitcoin into its financial reserves, saying that proposed that the city should start stockpiling crypto. We do see here Executive Council legislator Johnny Ng, excuse me if I pronounced that miscorrectly, that Hong Kong should make the move after the former U.S. president said he would create a national stockpile of Bitcoin if re-elected. We do see here in the future it is indeed possible to research and consider including Bitcoin as a strategic financial reserves as long as it is compliant. I do agree with that take. I think Bitcoin should be the only asset that's even being considered at this point to be a strategic reserve. So we do see here, obviously, the US government right now holds over 213,000 Bitcoin, so that's valued at about $14 billion. And that is just as a result of seizures from criminal activity. So it would be interesting to see the US start to build a strategic reserve based on the seizures of criminal activity. It would actually be beneficial to the people. Essentially, you're taking that money, that kind of ill-gotten money from the criminals as it hits the exchanges. So that's kind of the beauty of Bitcoin. Essentially, it's programmatic, so you can really track these wallets down, and when they go to try and cash out through an exchange, the funds can be flagged and then they can be held and then seized by authorities. It really just prevents some of these criminals from being able to cash out. So obviously the government has over 213,000 Bitcoin in their possession right now. It was well over 400,000 at one point. They have been selling it over the past years. Kind of ridiculous. If they just held that Bitcoin, they would be in tens, if not hundreds of billions of more profit. Essentially, like, they've been selling Bitcoin at a discount to investors for years. If they just held it, the amount of value that Bitcoin would have brought the US taxpayer would have been immense. So it really shows you, especially kind of looking back, the intrinsic value of these assets increasing over time, especially with the growing network adoption. So we see here Hong Kong positioned itself as a Web3 hub, already launching several crypto-related financial products. It does have a history of following the US lead. It has approved a smattering of Bitcoin spot exchange traded funds just months after the US regulators did. It also went a step further by approving spot Ethereum ETFs ahead of the US. So we did see, obviously, in Europe, I think they had an Ethereum exchange traded product. We saw in Hong Kong Ethereum ETFs, in Canada Ethereum ETFs. The US was a little bit behind on that front. That being said, they're kind of going full force into Ethereum now. It's a little kind of ridiculous, in my opinion, what they're saying about Ethereum as a potential reserve asset. Again, I'm in the camp that Bitcoin should be the only reserve asset even being considered at this point, but I digress. We see here, obviously, they also introduced inverse Bitcoin ETF, so allowing investors to be able to short Bitcoin as well. Introduced new licensing regime for cryptocurrency exchanges, which requires them to obtain a license or be in the process of applying one. It is interesting to note, as soon as they did actually implement this this regulation here, we saw major exchanges actually withdraw their applications. So not sure why they're not interested in kind of gaining that regulatory approval within Hong Kong, but you know, just something that we're aware of going forward. We'll flip over here. So US Bitcoin Reserve may be coming, but states are winning the race. Obviously, we've talked about the strategic Bitcoin reserve. At a state level, it's advancing much more quickly. We were expecting Trump and the administration to make an announcement. We were also expecting, you know, David Sachs in his crypto press conference yesterday to make an announcement, or at least make some comments regarding a potential Bitcoin strategic fund. That being said, he barely mentioned Bitcoin. It was pretty much a nothing burger. And yeah, the markets weren't really too happy with it. I definitely want to see them really state that they're going to implement this Bitcoin strategic reserve. And again, I don't care. I don't want an Ethereum reserve. I don't want a Solana reserve. Those assets are not advanced enough at this point to be held as a government reserve asset. Even Bitcoin, it's 15 years old, 16 years old, and it's just gotten to the point of institutional adoption that, like, even 3 years ago, none of us would even consider a government adopting this as a strategic reserve asset. And now we're talking about these little altcoins that they break every time that people need to use them. When there's an influx of people into the market, the congestion sends the network down. The fees get insane. If you've ever tried to transact on Ethereum during a mania phase, good luck with that. You're going to be paying hundreds, sometimes even thousands of dollars in transaction fees. So these assets are not at the maturity where a government should be custodying them as a reserve asset for their people, especially if they're going to be investing their own money from the government in these assets as well. It should be Bitcoin only for the foreseeable future, and let kind of the institutional investors mess around with the altcoins all they want. But that strategic reserve asset should not be anything outside of Bitcoin. That's my personal opinion. I know a lot of people agree. I know a lot of people disagree. It doesn't matter. Whatever stance you take, you're not wrong. It's just what you believe. So continuing on here, sorry to digress a little bit. We do see here there's 16 states that are considering active legislation to put in public money into digital assets. 3 others potentially poised to join them. And 2 states have already dipped small portions of their retirement portfolios into crypto exchange traded funds. So we do see some of the timelines in these bills would have them buying up Bitcoin and other assets very soon, potentially before any national level reserve can get started. So almost half of the state governments, that's pretty impressive. Obviously they're mostly Republican states or Republican heavy states, but we do see half of the state governments on a path toward putting some of their money into crypto or already have. 21 states are investing or looking into investing, generally in the industry's leading token, Bitcoin. So again, that's what I said. I want them to focus on Bitcoin. I don't care about anything else. Let the people gamble on the altcoins and kind of do the more degenerate gambling, the more risky investing. Don't be investing in altcoins with public money. That's just asking for trouble. So obviously, investing in less volatile stable coins that are designed to match the US dollar, that's another potential there. So something like USDC. There's also speculation of XRP based they're not central bank digital currencies, but XRP is a centralized company, and therefore if they launch a CBDC that's pushed by the government, I basically consider that a central bank digital currency. So I kind of digressed there as well, but I do expect we're going to see more push from XRP. They have their hands kind of all over across the administration. They got lots of relationships. They've been funding a lot, so expect obviously XRP to gain some market share. I assume they're going to get into that stable coin business here. And then kind of moving on though, we see Arizona, Pennsylvania, Utah, and Texas already digging into legislation to open public funds to buy cryptocurrencies. Should only be Bitcoin again, but going down again. If the states begin pouring portions of their public funds into Bitcoin and other digital assets, it could potentially lock down billions of dollars of tokens for extended periods. Obviously, if it's a retirement fund, they're buying and holding on a long-term basis. Cynthia Lummis is looking at a 20-year plus time horizon of holding Bitcoin on kind of as a reserve asset. So, and any real investor, if you're getting into Bitcoin, 5-year time horizon, it should be the minimum you're even considering, just because of the 4-year cycles. So if you're going to be here for less than 4 years, there's a good chance that you might get caught on the wrong end of a trade and you end up down a lot, and then you just cut your losses and you wish you never did it, and you leave and you don't come back until you see the next cycle when Bitcoin pops again and you get FOMO, and then you're trying to get back in. So that's not what we want to do. That's why I'm here. That's what I want to teach you. Essentially, we just position ourselves, we wait patiently, we buy when things are cheap, and we sell when things are expensive, and then we repeat the process. It's not rocket science. It's all about managing that emotion. So we do see here that potential to boost the value going forward. So also just a nice interactive map of kind of what states have actually expressed interest or pushed legislation forward. So yeah, a pretty sizable amount of the US state-wise all pushing for that strategic Bitcoin or crypto reserve. We see here governments are looking to follow in the footsteps of Michigan and Wisconsin, who have actually started putting part of their retirement funds into those assets. And then other pieces of legislation would instruct state treasurers to spend as much as 10% of their funds on a strategic reserve, specifying that qualifying digital assets must have at least a 500 billion market cap. I really like that. So only Bitcoin right now is the only possible opportunity for those, if that is a clause within the legislation. We see Arizona, Utah building a lead, but we also see bills from Illinois, Indiana, Kansas, Massachusetts, Missouri, Montana. All of these, I'm not going to list them all off, but you can see so many states interested in this Bitcoin or crypto as a strategic reserve asset. So really, you can't ignore really that amount of interest, especially from such a high level of government. We do see reasons that the lawmakers say they're backing these bills include investment diversity and embracing technological innovation. So we have talked about the technological innovation of Bitcoin and crypto, the ability for financial freedom and equality, the ability to tokenize real-world assets, that kind of thing, the ability to just have an open and honest ledger that tracks your money. It's not changeable, and you have the same rights and freedoms as any other person. So that's kind of really what it's all about. We also see here, this could eventually, the amount that the states are investing could eventually be overshadowed by the U.S. government here, of their own reserve. Obviously, evaluating the potential creation and maintenance of a national digital asset stockpile. So that was President Trump's during his executive crypto order. And again, saying it may be built from government seizure of crypto in criminal cases. They might as well. If you're going to seize it from the criminals, put it on the balance sheet and let the price appreciate and let the people kind of benefit from that. I don't see any point. There's essentially, when they get Bitcoin, they sell it to accredited investors. So that's investors that they know and have a personal relationship with most of the time, and they're able to go in and purchase this Bitcoin at a discount to the spot price in an auction style. So it's kind of ridiculous that they're seizing this Bitcoin from criminals and then giving it to their friends at a discount when they could just put it on the balance sheet, watch the price appreciate, and then give some of those returns back to the people, or use some of the returns to help pay down the deficit. Like, that's a really smart idea. If they adopt a strategic reserve asset, and then during times of euphoria, like in these bull markets, taking profits and then really using that money effectively to kind of pay down debt or deficits, there's a lot of different ways they could leverage this and use it. But obviously we see Cynthia Lummis, she wants them to hold it on a 20-year basis, and wants them to obtain $20 billion worth of tokens in the first year, and then buying 200,000 Bitcoin every year for the next 4 years. So she wants the government to hold 1 million Bitcoin. Again, that's probably a little unrealistic to expect, especially right out of the gate. We will see kind of what goes on if they do adopt this strategic reserve. Obviously, structured more as a long-term investment held for at least 20 years, would be 5% of the finite global supply of Bitcoin going untouched for 2 decades. And this would also be in addition to towering reserves held by the U.S. ETF issuers like BlackRock, Grayscale, Coinbase, and as well as MicroStrategy. So yeah, obviously a lot of interest from the U.S. for this. We do see here that naming Bitcoin as a strategic reserve puts the digital tokens on par with gold and oil as economic mainstays. It's very interesting. The new Bitcoin spot ETF surpassed the gold ETF in about 10% of the time. So essentially, what gold took them to do 10 years, the Bitcoin ETF surpassed those inflows in less than a year. So just record-breaking inflows from the Bitcoin ETF, completely decimating gold. Basically, Bitcoin has been outperforming gold for years now. Gold as kind of that digital gold narrative, kind of more skewed towards the younger investor. So there's a whole generation of new investors, and they aren't buying the same stuff that our parents were buying, because those portfolios don't necessarily always work in the long term anymore. You might not keep up with inflation, bonds aren't as attractive as they used to be, and gold is not as attractive as it used to be. It's really expensive, it's not volatile, it doesn't move around very much. So a lot of people did take that asymmetric bet on Bitcoin as kind of gaining more and more market share from gold as the digital gold. And that was a really good bet. I kind of took that bet myself, and I still do believe in that. I do believe that as we kind of progress in this digital age, especially with the younger generations being more and more digitally inclined and kind of attached to their technology, we're going to look for kind of different opportunities like Bitcoin, a new kind of currency that makes sense with the future growth of technology. So definitely cool to see that. We see here millions of people will enjoy more comfortable and well-funded retirements or public services, or millions of people will watch a crypto crash eat into their safety net they're counting on. So obviously, we do see here, so there's a potential outcome obvious. It is volatile. There could be a downward swing. We could go into a bear market. Bitcoin will generally go down 50 to 70% in past bear markets. We're not sure really the effects now with this new influx of institutional adoption and buying, but you have to always be aware and be prepared. That's also why I say we should only be considering Bitcoin as a strategic reserve asset, because everything else is too new, too volatile, and it's just not smart for us to be investing public money in kind of little altcoins, things that might go down 95%. You can't stomach that. Bitcoin, that being said, so Justin Trudeau, basically, Bitcoin was about $16,000 US, and Pierre Poilievre made some remarks about Bitcoin. He wasn't telling people to go buy, but he was telling people to kind of just look into it as an option, as an alternative investment. Even if you just looked into it and bought a little bit there, that would have been an insane buy. You'd be up 7 times your money on that. And Trudeau at the time was telling people that it was reckless, it was irresponsible, it was gambling. That being said, he couldn't have been more wrong. He pretty much called the exact bottom. Price ripped up. It's gone up to over 109,000 US, so over 7 times when he said to just ignore it and that it was gambling and that it was risky. It's like, yes, it's risky, but it's an educated risk. So you're kind of taking an asymmetric bet on the potential growth of the network. To me, it's just math. The amount of money that needs to come into Bitcoin and crypto is such a small amount when you look at the grand scheme of things. When you look at all the wealth in the world, we just need to capture a tiny percent, like a little percent of that, and it's going to send Bitcoin to prices that none of us could have ever imagined. So really just paying attention, and that's why when prices are down like that, that's why we have our strategy. That's why we buy into strong fundamental assets. I wasn't worried one bit with Bitcoin at 16,000. If it went down to 10,000, I'd just buy more. If it went down to 5,000, I would have bought more. It's hard the first few times that you go through those big corrections, but you go through those corrections, you buy when it's low, and you experience the upside, and you recognize the potential in those future scenarios playing out again, and you have to take advantage of that when the time comes. So again, that's why we practice patience. That's why we focus on the charts, so we can really try to pinpoint those opportunistic times to buy, position ourselves, and then wait patiently. This is a long game. You're not going to be making 10 times your money overnight or in a week. It can happen to some people, but again, the more risk that you take, you have to be prepared for that risk to the downside. And yeah, so just moving on. Here, we're going to take a look at the Bitcoin miners really quick because we're having some monthly updates come out. So we saw Mara here came out, monthly update, mined 750 Bitcoin at an kind of efficiency of 14.1 Bitcoin per exahash. So we are seeing the Bitcoin mined per exahash drop off from the previous month. We did get a crazy jump in the network hash rate. It jumped from like 600 exahash to over 1,000 exahash briefly. It's back down to about 680 now. So interesting. But yeah, we do see here. So Mara mined 750, 14.1. We see CleanSpark mined 626 Bitcoin at 15.61 Bitcoin per exahash. So we saw them. Riot 527, 15.73. Core Scientific 256 and 13.8. And then down here we've also got Bitfarms here with 201, 13.22. Cypher 219, 16.22 Bitcoin mined per exahash. Hut 65 Bitcoin mined, 13 Bitcoin per exahash, and DMGI 31 Bitcoin mined and 17.7 Bitcoin per exahash. So obviously DMGI, Cypher, Riot, and CleanSpark, kind of the more efficient of the miners. Then we saw Mara, Core Scientific coming in the middle of the pack, and then we had Hut, we had Bitfarms, and we've had Cores. We had Hut and Bitfarms basically coming in a little bit less efficient. So interesting to note. We will just go down here. This is just my Bitcoin miner tracker. I do have this document referenced in my educational resources. So in the description, you'll be able to access my Google Drive. I have all these documents here. You can download them and reference them as you see fit. So kind of looking at different fundamental metrics of the different miners. So we see here, we see Mara here at 53.2 exahash or 7.8% of the network. We see CleanSpark came in, increased their exahash by 2.5% this month. They also decreased their efficiency by 8%, so really good job from them. More efficient, more production. I also want to allude, they did add a bunch of energy under management. So previously they had 726 megawatts of energy. They've just announced they're up to 873, so that's 147 megawatt increase. That was 1 exahash that came online within that energy. So I kind of did some back of the napkin math and came up with the idea or kind of the number. They should be able to add an additional 7 to 8 exahash before getting to the top end of this 873 megawatts. They did say they're looking to add at least 5 exahash over the next 2 months. Other thing to note, CleanSpark generally does sandbag their predictions, sandbags their growth, and they often outperform on it. So I wouldn't be surprised to see them beat that kind of ahead of schedule Obviously targeting 50 exahash for the first half of the year, and right now they're at 40. And again, with that 8 additional potential capacity, that's going to get them right around their 50 exahash target. So really look for them to smash that 50 exahash target for the first half and revise it further up for the second half. Maybe we're looking at 60 to 75 exahash ending by the end of the year. That'd be pretty ambitious, but it wouldn't be out of the realm of possibility in my opinion. So we see Riot, no difference for them. We see Core Scientific minus 3.2% in their self-reported hash rate here. We saw Hut with a minus 10% difference in their hash rate. Basically kind of flat across the board for everyone else. You can see their respective kind of network share here, as well as their you see their energy footprint. So yeah, interesting to note. Obviously, CleanSpark looking really good from a fundamental perspective. They're one of my favorites. I like Core Scientific as well. They're doing well today. We'll take a look over at our miners quickly here. So if we flip over to the Bitcoin miners and we take a look, so kind of red on the day, except Iris Energy up 3% and Core's up about 3%. So both miners were really bullish on Core Scientific and Iris Energy. But obviously, you see here the Bitcoin miner ETF. We didn't manage to take out this high here. So technically, we're kind of, again, we're just in this bear flag consolidation. Let's see what happens. Kind of if we're stuck, here in this bear flag, and we've got our upsloping trend line from here, something like that. We might be looking. So just watching that, we want to break out of this, keep putting in those higher highs and higher lows. But yeah, kind of just watching the miners. If we look at our momentum indicators on the 4-hour, kind of oversold here. Again, we want to see this DMI plus line get above the orange line, and we want to see this red line start to curl up. We do see the stock RSI kind of curling back over. Looks like it might be approaching a bit of a bearish cross. So, and then kind of our technical rating here looking like a sell kind of on our shorter time frames. So again, I just think we're due for more consolidation. I do think that buying miners in this 786-618 zone is pretty good high time frame value. I'll flip over to the weekly again. So yeah, if we come back down here, look at a position in WGMI, and then down here is going to be a really good opportunity if we do come back here. Otherwise, we talked about miners in the past, and again, I have all my entry levels for the miners in the document that I just referenced, so you're free to go and check those. But yeah, just seeing this across the boards, we see CleanSpark. Yeah, going into, we're going to have a bunch of earnings come out this week as well. So even on the week, kind of came into that support zone, bouncing here. We'll see what happens. Yeah, kind of a little volatile week potentially surrounding earnings. I did DCA CleanSpark in this support zone here, and again, it's just a DCA buy. I'm not getting too crazy, just recognizing some potential risks in the macro environment, and then yeah, not getting too aggressive. But again, I want to add to my core cycle positions or my long-term kind of conviction positions there. So CleanSpark's definitely one. I like Marathon. Riot's definitely got that potential to kind of garnish some AI hype. We talked about that kind of coming back down. So maybe if we get a retest of these lower levels, it might be a decent little entry in Riot. Iris Energy, we talked about that. We've talked about Hive as being really good value, kind of again in that kind of high time frame, high value zone right there. But again, recognizing the broad market risk. If we come back to here, this is going to be your accumulation zone that we're targeting. So we'll kind of get on from the miners a little bit because we'll cover them lots. Don't worry. We'll make sure that we're kind of staying up to date on the miners. Again, I'm just not getting too crazy today. We'll take a look at some more and just show you kind of see Galaxy. Look right through here. Look at this support. Kind of broke below this trend line here. Again, but it did regain it. So watching Galaxy's another one that could garnish some AI hype if they sign a deal. Looking at MicroStrategy, pretty decent. Again, though, they're going to have their earnings. We'll talk about that later. They've just been riding this trend line here. But we do see, so it's looking good right now. We're riding this, deviated, got back above it. It is not looking not looking very good on the near time frame. You see bearish cross, looking bearish. Let's take a look at our MACD here. Also looking bearish. So bearish cross, red histogram. all our indicators kind of looking a little bearish. We did see some pretty big buys back, or some kind of bigger buys back here. Maybe some people trying to play earnings a little bit. I have a swing position on MicroStrategy, by the way, at the current price too. So it's kind of just another hedge position. If the market's to reverse and kind of go up, then I can catch some of that move. Otherwise, you know, if the market dumps out, then I've got my, you know, I'll just cut it. You know, it's not a big loss, but again, just a bit of a hedge position. Flipping over to Coinbase here, we'll take a look quickly. You know, not really at an interesting zone either, kind of just between resistance up here and this bull market support band right there. Flip over to Bit Digital, it might be breaking. Oh, so yeah, again, if we look here and we pull our fib level, Bit Digital is one I am bullish on. You know, maybe look for that entry down here under $3 down to about $2.95. That's going to be near term entry. If we flip to the weekly, we will look and see how things look. You know, we're at that pretty high time frame support. If we pull our Fibonacci from this rally to here, you know, we're still just below that 786, holding this upsloping trend line. I do like Bit Digital. I have a position in them, but I'm going to wait for prices to come a little bit lower before I start adding more. That being said, this is good high time frame value. If you don't have a position in Bit Digital and you want one, you know, it's not a bad time to start one. Again, just be aware of that potential near-term risk. But we're looking pretty good on the indicators across here. We saw kind of on the weekly, we did have the big buyers step in here, and then we've broken out. So yeah, but our technical rating is not looking great yet. So those not triggering quite yet. Again, I think we just need to do some more bottoming, some more consolidation, and then go from there. Flipping over to Core Scientific, we'll flip to the daily just because it has less price action. So we see here, we're coming into resistance. We came back, look at that, 618 retracement entry, coming into resistance. Let's see what happens here. Ideally, we break out, back test, hold that higher low, and then we can go up and continue. Maybe we take out this, there's a huge daily gap fill right here. So I'll show you guys these. Essentially, you get these gap fills, and generally price comes back and retests them. So look, the gap between this candle and this candle in a single trading session, that's what's going to give you that daily gap fill, and they're generally good targets to kind of look at. Generally price will come back up to these gaps, fill them, and then kind of reject and do some more, whatever it's going to do, if it's going to consolidate or if it's going to break down more. But yeah, just watching Core Scientific for now. Again, it's just in resistance, you know, decent little support here. If you wanted to DCA and you kind of believed that the general markets are going to start trending up, then, you know, decent little DCA area here, but this was the entry for cores. Flipping over to Wolf, again, we're coming into that upsloping trend line here, getting a bit of resistance. So look for that higher low. It's that golden zone is going to be kind of closer, under about 425 is probably what you're looking at for them. So yeah, kind of just flipping over now. We'll get into a little bit of Ethereum here. So we see Ethereum ETFs log their third largest inflow day amid 648 million of crypto ETF surge. So we saw US spot Bitcoin ETFs commanding $116 billion in Bitcoin, or almost 6% of its market cap. US spot Ethereum ETFs holding 10.3 billion, or 3% of ETH's market cap. So to get a similar weighting, we'd have to see Ethereum kind of double down. Obviously, the ETH ETFs have not garnished as much attention or as much liquidity as the Bitcoin spot ETFs. But that being said, they're newer, so that is expected. The Bitcoin spot ETFs and the Ethereum ETFs pulled in 648.5 million, recording their third largest day ever of inflows. So 307.77 million of Ethereum for February 4th. See here, there's the inflows. And we see their Ethereum Trust, ETH pulled the lion's share, so 276 million of that was from BlackRock's iShares Ethereum Trust. It's also interesting to note World Liberty Finance essentially bought $280 million of Ethereum, and then they've moved it out of this wallet, so they no longer actually hold this Ethereum in this wallet. They've moved it. So it's curious that this ETH ETF essentially took in almost the same amount of Ethereum that day that World Liberty Finance moved out. So we're not really sure what's going on there. Maybe maybe there's some potential for staking to kind of staking revenue to be announced in these ETH ETFs as a way to earn yield, in which case I think that would increase a lot of institutional adoption and buying, especially if they're able to earn 4 or 5% in staked ETH or something like that through an ETF. So maybe there's something like that. Maybe they've just moved their money around. Who knows? We're all speculation at this point. We do see here kind of the other various ETH ETFs also pulling in, almost 25 million here. And we do see here essentially its current assets. So we see Fidelity's Ethereum ETF to pass the Grayscale Ethereum mini trust. It's in kind of Bitcoin ETFs. So Bitcoin ETFs tallied 340 million in February 4th. Also appears, so investors weren't really shook by that dump. Markets dropped from 100,000+ back to 92, and they just bought the dip. And that's what the smart money does. You buy the dip on these substantial retracements. A 20 to 30% correction in a bull market is worth buying, in my opinion, as per history, kind of. So we just follow that. IBIT pulled in almost 250 million in net inflows. So its cumulative net inflows are 40.73 billion. That's what we talked about, how it surpassed their actual gold ETF, and in such a fraction of the time. Also see here other ETFs also pulling in millions of dollars. We see in a bizarre twist, so Grayscale, the Bitcoin Trust, basically they were trading at a premium. So when the new ETFs launched, you had a bunch of sellers basically selling their Bitcoin from the Grayscale Trust and then probably repurchasing kind of the ETFs that more closely tracked the actual price. So Grayscale went on a long long trend of just outflow of Bitcoin. They did manage to get some inflows here, so interesting to see more inflows kind of around all the ETH ETFs. We talked about Liberty Finance, they're buying Ethereum, and then so we also have this news here, ONDO Finance launching on-chain securities platforms. We do see here, introduced ONDO Global Markets to tokenize securities, stocks, bonds, and ETFs, make them more accessible, enhance efficiency, transparency, and accessibility, addresses issues such as high fees, limited access, and market fragmentation, and significant market cap of tokenized real-world assets in the involvement of major financial entities like BlackRock. So ONDO's one we're bullish on. We're looking at that going forward, but this is exactly what I've been talking about in terms of tokenization of real-world assets and then providing those assets to everybody in the world just to create a better sense of financial equality or inclusion. So this is really going to help address that problem, give more people access to these investment vehicles and the options to kind of get involved in different technologies that they previously weren't able to get involved in. Flipping over, MicroStrategy set to announce earnings later today, so this is going to be a big one. He's alluding it as a big strategy day, talking about light of the new Financial Accounting Standards Board, FASB rules. We've talked about those. So previously, companies that had Bitcoin on their balance sheet had to report it as a loss if they had an unrealized loss. So it was recorded in earnings as a loss, making their earnings look really bad. But it was kind of weird if they were in a realized or an unrealized gain position. They weren't actually able to claim that unrealized gain as revenue. So it's kind of interesting that essentially you were just being negatively affected for holding Bitcoin on your balance sheet in the past, whereas now with FASB going forward, they're going to be able to actually report unrealized gain on their digital assets. So in MicroStrategy's case, I think their unrealized gain is about $17 billion, and a lot of miners, their unrealized gain is going to be $300, $400, $500 million, in some cases even more. So we'll be watching that going forward. We're definitely glad that we see this new accounting standard be kind of brought in, and it's going to be really bullish for the miners and the Bitcoin proxies that are holding kind of assets on their balance sheet. So you're looking at Coinbase, you're looking at MicroStrategy, Galaxy, and then all the miners that we talk about. So we do follow them all, and we are going to be looking for more additions in our portfolio. We're always looking for opportunistic times to kind of add assets at high times of value, and we just follow that going forward. So we're just going to take a look at the macro kind of side of things. So we want to see what's going on. See the US 10-year dumping down back here to this 618 right here. We'll see if it gets a little bit of relief. Kind of still just back testing this down sloping trend line breakout. You do see that we kind of reversed our price action here. So we were in this this uptrend that's now reversed. We're in a technical downtrend for the time being. We'll see what happens. It's interesting to note if the 10-year is kind of falling due to more of a risk on environment, or if the 10-year is kind of falling due to more recessionary fears. I mean, it can be a result of either. That being said, we do see the SPY up a little bit, kind of a little bit of relief across our assets here. We actually see the IWM outperforming the S&P. So this is the smaller cap stocks. This is generally what our miners kind of track as well. So yeah, we want to see it come out, break this high, and put in that higher low. And then, that's going to be that uptrend, trend reversal structure that we're looking for. TLT up 2%. You guys know I've been talking about TLT the last few days, and great price action, and we did take out that high. So again, we just look for that higher low and continued uptrend structure. So that's kind of the one thing I'm looking at. If we see the US 10-year down this much, and we see the dollar, the dollar, it's looking a little weak on the low time frame. That being said, it's still holding these high or these lows here until we kind of put in that lower high and lower low. Then we still have the potential to just keep grinding up for the dollar. So nothing really actionable in the dollar's eye right here. It's just kind of ranging. We'll see what happens. The 10-year obviously down a bit. We look at the SPY, getting a little bounce again. I don't see much resistance until we get up to this trend line here and the bottom of this support zone. So look for resistance here. If we see a rejection, that's that lower high. Watch for the low or the higher low, or watch for that kind of continued breakdown. Obviously kind of, mixed results across the board here, except gold. Gold's pumping again. So this is what I kind of take an issue with, is Bitcoin's weak. Gold is strong, silver's strong, TLT is strong, the 10 years down, so it might be signaling to me that, people are a little worried. We just got pretty much confirmation that the Fed does not need to cut rates, so that's not bullish. We've had the Bank of Japan unwinding their not unwinding the carry trade, but essentially raising rates, causing investors to unwind that carry trade. We've had increased tariff escalations, so there's a lot of uncertainty in the market right now, and that's kind of why I'm in the stance where I'm just sitting on my hands. I'm not getting too aggressive. I'm comfortably exposed to the market, and I've got a comfortable cash position to take advantage of a dip if we do see it. Again, gold just rallying on this uptrend, not showing any signs of slowing down in the near term. So just following that, and again, following the S&P. Right now, we're just range bound. So yeah, not getting too crazy. We'll flip over, we'll look at Bitcoin. We did talk, we were holding off on alts again, and you're going to see why. So right here, ETH Bitcoin getting a bit of a bounce, but you see total 3 down again. Total 3 down. We are saying wait for that higher low. Others dominance. Continuing just to bleed down here. So again, others not ready to really put in that bottom structure and start outperforming Bitcoin on the high time frame. We do see some kind of relief across different alts here, but again, most of these are going to be down for the week. So yeah, nothing too actionable. We want to see what Bitcoin and Ethereum kind of do going forward. We did have a swing long on Bitcoin. That being said, I took profits on it. I kind of shared that in my Telegram group as well. But again, I also mentioned that on the video yesterday. So that entry, I took some profits and we're just out of it for now. Again, we're at that 618 level. So, if you wanted to try that swing trade again, you could kind of right here, but just have a stop loss, maybe under here just to protect the downside. Again, we're just kind of consolidating, just chopping around, showing more weakness. Again, look at that downtrend structure. So until we put in that higher low, higher high, higher low, then this is a technical downtrend, and we are not interested in buying into it on any kind of accumulation basis. That being said, you can swing trade these. They're higher risk. I don't always recommend it for most people. Again, just wait for the price to come back to those high time frame value areas. So if we see it come back to 92, you want to be buying there. Even if we come back to this 786 here, 93, I argue that's pretty good value, low time frame. It's going to be similar. Like I'll show you, if I pull the Fibonacci from this swing low to this high, then we see, exactly that 786 of this low time frame lines up with the 786 of this higher time frame. So that's confluence right through there. And again, might offer a decent little swing opportunity, but kind of in the time being, again, I mentioned, we're not getting too aggressive. We're letting the market tell us the general direction. wait for confirmation of the charts, and we'll just kind of, we'll take it day by day. You know, things don't just move up and down. They don't just go straight to the moon and back. You know, sometimes you'll see something pop 25, 30%, and it'll still give you that opportunity to buy in at a cheaper price most of the time. So we're not getting too caught up about the trades that we've missed. We're just positioning ourselves in the assets that we want to hold long term. So thank you guys for watching. If you learned something new, please like, share, subscribe. It all means the world to me, and I will see you guys tomorrow in the next one. All right, bye.